Welcome to Founder Files, the podcast for growth-minded leaders, investors, and operators shaping the future of business. Each episode dives into the critical decisions behind scaling, from finance and fundraising to leadership, strategy, and technology. Founder Files is powered by Cypher, the AI-powered and human-led finance partner helping growing companies scale with clarity and confidence. Learn more at cypherfin.com. Sales tax is one of those things founders don't worry about until it becomes urgent and really expensive. In today's episode, we're breaking down what sales tax actually looks like today, what Nexus really means, why SaaS and AI companies are often not as exempt as they think they are, and why relying on software alone can quietly create serious exposure for businesses and as you scale. I'm joined by Monika Miles today, sales tax partner and a true expert in multi-state tax. She brings over 25 years of experience, including time as a senior tax manager at a Big Four accounting firm. And she has spent her career helping companies untangle complex sales tax issues across industries from SaaS, AI to retail and manufacturing. Monika has a rare ability to make complicated state tax rules practical, understandable, and fixable. And this is exactly what this conversation is about today. She also loves public speaking, so we're in for a treat. So if you're a founder scaling across states in capital, or you just want fewer surprises hidden in your financial operations and sales tax compliance, this episode is for you. So let's get into it. Monika, thank you so much for being here today.
Thanks for having me, Salma. I'm really excited to be here today.
I'm so excited to learn from you because I will be learning alongside all of our founders listening today. So one of the first questions I want to ask you is that buzzword that everyone hears about, Nexus. I'd love for you to tell us what it actually means, especially economic versus physical Nexus, and how has the shift from physical to economic Nexus changed the game, especially for SaaS and AI businesses today?
Salma, great question. And I mean, honestly, it's funny, but not a day goes by that I still don't talk about Nexus, right? I mean, what kind of sales tax consultant would I be if I didn't talk about Nexus all day long?
Correct.
But it's the foundation kind of everything that we build on in the state tax consulting world. So I talk to my clients about following sales tax kind of through a funnel. And so I'd like to kind of go through that with you and your audience because I think it would help. And I think we'll have some questions later that will probably help exemplify that as well.
Yeah.
In a quick sense, Nexus it's the minimum presence that a company needs to have in a state such that the state can require them for sales tax purposes to have to register in the state and start collecting tax. So how much presence do you have in a state such that the state can say, hey, company, you need to start collecting the tax? Because remember, sales tax it's a fiduciary tax and it's a pass-through tax. So it doesn't have to be your liability, but companies that do it wrong, sometimes they have to go back and end up paying back liabilities. So when we think about Nexus and kind of this funnel that I'm talking about, Nexus is at the top because all conversations start with that. And we have, as you mentioned, the two different types of Nexus. There's physical presence and economic Nexus. And it used to just be physical presence. We used to worry about where do you have employees, where do you have offices, where do you have inventory, those kinds of things. The U.S. Supreme Court case, Wayfair versus South Dakota, in 2018, I can't believe it's already been 8 years, it introduced the concept of economic nexus. So when we talk about physical and economic, we have to look at both of them, whichever creates nexus for a company in a state first. So again, a physical presence can be where you have employees. So you have employees resident in that state, working in that state. It also applies to some third-party contractors. So we can talk a little bit more about that. But if you do white glove service or you hire a contractor to help implement things or deliver things, that may create nexus. Inventory in a state, an office in a state, those are all examples of things that give physical presence.
Yeah, I can't help but think how relevant this is for SaaS companies, specifically remote teams, because a lot of tech companies, whether they're SaaS or AI, have remote teams. And so they could have employees in different states and do not realize that creates physical nexus for them.
We see that all the time, particularly in the years since COVID now, right?
Yeah,
because a lot of people went remote and all of a sudden these SaaS companies had employees all over the states. And so we deal with that.
Easier for e-commerce because inventory, they know that warehouses create that physical presence, but a bit more tricky, or if you are not educated in the topic, you probably wouldn't know about the contractor and employee
Right.
location.
Right.
Great to know.
An important part on on the physical presence nexus too is it's not that you just necessarily have to have a person residing in that state. If you have a salesperson, let's say, and a traveling salesperson, which again, now that the world's kind of opening up and
Yeah.
people are doing that more, right? We're seeing more travel again. So if you just live in California and you're traveling to Arizona to make sales calls, even if that employee doesn't live in Arizona, that activity could create nexus.
Wow. Well,
Yeah.
see, these are things we're glad to know today and learn. Okay, so what about economic nexus?
So economic nexus is really based upon how much sales volume you have in a state. And it can
Okay.
be measured depending on the state, either by the amount of sales. And in
Hmm.
many states, that's $100,000 threshold. So if once you hit
Okay.
$100,000 of sales in a year-long period, you've hit nexus. Or in many states, it's still a transactional threshold as well. So many
Hmm.
states have written their laws that say whether when you hit 100,000 in sales or 200 transactions, you've
Hmm.
created nexus. States are starting to do away with the transaction threshold because I think
Hmm.
they realize it's punitive and it's
Hmm.
also really hard for the state to track that. But
Jeez.
know that there's still many states out there that have the either or, and so it's which comes first. And specific to software companies, SaaS companies, if you have a subscription, so let's say you bill monthly for
Hmm.
your SaaS subscription, it's 12 transactions, right? So
Exactly.
if it's a state that only allows 200 transactions before you hit the threshold, it can
Oh my
happen pretty
gosh.
quickly. You don't have to have that many
Very
subscribers.
quickly. Exactly.
Yeah.
So let's say a company reaches Nexus. They have
Mhm.
Nexus in a specific state. What's their next step? What do they need to do?
Yeah, great question. So that's as I'm coming down the funnel, right? So
Okay.
Nexus happens first. Then we have to ask the question, okay, are your goods and services subject to tax? So
Hmm.
taxable is kind of the second step.
Oh, okay.
And let's say we're talking about SaaS companies again. About half the states tax the SaaS revenue stream, the subscription stream, and what have you. And then there's also ancillary things, right? You might do consulting, you might do some installation, you might do some training. And those things, we would look at each of those separately in these different states. So if you're a typical SaaS company, you've achieved Nexus in a given state. Now you look at, is SaaS taxable? Is training? Are those other ancillary services also subject to sales tax?
Okay. Because I mean, to be honest with you, a lot of SaaS and AI founders, a lot of which we work with, assume that they are exempt. And
Right.
it's obviously often not true. What are some specific characteristics of a SaaS or AI product that is likely to be taxable?
It's a lot of this gets back to how the contract is written.
Hmm.
So, states actually do go back to contracts. And at Miles Consulting Group, we're not a team of lawyers, right? So we're
Hmm.
mostly CPA based and accounting based. So we don't practice law. So I want to be clear about that. But it is helpful to look to contracts to see what the company thinks they're selling,
Okay.
and we kind of interpret that and say, hey, here's what the state thinks you're selling. Again, things that are subscription based in the cloud, accessible online, those are some of the triggers and kind of buzzwords that states are looking for. So
Okay.
it's less about it being exempt
Hmm.
as because there's certain exemptions as well. So backing up just a little bit into my funnel, again, if you have Nexus and then it's taxable, then you also can ask if things are exempt. And exemptions are things like often if you're making sales for resale, that can be exempt. Or if you're selling to exempt entities, that could be exempt. Or another exempt purpose. But the taxability is kind of decided in here. And again, about half the states tax the SaaS revenue stream. One of the things we find, and I'm based in California, is California is probably the largest state that population wise and what have you that doesn't tax SaaS. And I think a lot of it's because of our technology here. We're
Okay.
protecting our technology companies, right?
Yes.
But I think people get lulled into an unrealistic sense of security. They can say, well, if it's not taxable in California, it must not be
It's
taxable
not
anywhere
taxable
else.
anywhere.
But that's
Okay.
not true. Other large states that tax SaaS include Texas, Washington, Massachusetts, New
Mm.
York, Pennsylvania. So those are states that do tax SaaS. So it's really something you need to look at on a state by state basis. And we can help with that.
Okay, well, that was going to be my next question. Why is it important to work with a sales tax accountant? Sorry, sales tax consultant. There are tools out there, and a lot of SaaS and AI founders love to use that automation, which is great. So there are
Mhm.
sales tax tools like we hear Avalara, TaxShar that could be used by founders. But why can those tools quickly lead to major exposure? And why is it important to work with an expert? Because this could get really quickly overwhelming. I mean, it's so much information to keep up with.
Well, Salma, I mean, I'm sure you've used a lot of software in the past, and we
Oh,
all
yeah.
know that software is perfect and it does everything right, and you can just plug it in and set it and forget it, and things work out great.
Yes.
Or not.
Or not.
I mean,
I almost believed you there for a second. I was like,
no,
"Really?"
I mean, let me start by saying that, we truly do believe in the software companies and we are
Yeah.
partnered with a lot of them. So we partner with a lot of the major players in the sales tax software space.
Mhm.
There's a lot of really good products out there. There's a lot of fledgling companies too, though. Everybody's trying to be the next big software solution. So
Yes.
it's good to always vet those software companies as you're thinking about buying
Yeah.
one of them.
Yeah.
But what I will say is our mantra here is basically that we use software and also strategy. And we're the
Yeah.
strategy piece. You can't just plug something in and set it and forget it. There's so many pieces, right? So you have to determine nexus. The software companies do a pretty good job of helping you with economic nexus, right?
Economic.
Because if you
Correct.
upload your sales data, they can count, right? That's what they do. And they can say, hey, you're getting
Yeah.
close to the $100,000 threshold
Exactly.
or what have you. So easy, but they may not consider the physical part, right?
Correct. Yeah.
Always, and it's always user error as well too, because if the user doesn't know that they need to talk about physical presence, it may not come up. So that's something we see all the time, where that's something that's been forgotten is that people don't consider the physical presence part.
I agree.
And then the other thing is there's coding, right?
Mhm.
So if I have a product, if I have a widget, I need to go into that sales tax software and code it properly. So I need to tell it
Mhm.
exactly what kind of a widget it is. If it's software as a service, I need to tell it it's that. It could be something different than software as a service. It could be data processing. It could be information services. So that's where there's some nuanced areas that the software will probably calculate the tax correctly as long as you've coded it correctly. But
Mhm.
companies may not know exactly some of the nuances about why something might be taxable or not, and may not pick the right code. So that's something else that we can help with
I'd also add to that, we also leverage automation. It's complementary to what we do.
for sure.
And we leverage AI, and it's really important in the services that we provide today in order to be efficient. But we have seen situations before where sales tax tools were used and then there were glitches, and those glitches were never caught on time. And then the returns were not filed. And, a few months later, you realize that you have some exposure and things to catch up on. And that's where we rush to the sales tax consultant to come in and help. But then again, it comes with cleaning up and the expensive bill, etc. So I think, having the tax tool if it's needed, plus the sales tax accountant is really crucial to make sure that you are doing it properly and efficiently and with strategy, like you said.
Yeah, and we have the human eyes and the human
Yeah.
brains component, right? I mean, and I'll be the first to share that AI is great, the software tools are great, but every now and then you just need somebody that's had a chance to
Yeah.
look at it, that's got some years of experience behind them, and can say, well, yeah, this all might work, and here's the problem, and we try to
Exactly.
dig in and figure out the problem. Then, Selma, to your point too, if you've made mistakes in the past, you need somebody to help you clean those up,
Oh,
and
yes.
all the software in the world, you can't push a button and clean that stuff up in the past. So we
Yes.
spend a lot of time at Miles Consulting helping people fix their retroactive errors so that they can properly be reporting on a go forward basis, which is really the goal, right? We all
Mhm.
want to be able to collect the sales tax from our customer, carry it down the path, file the returns, and get that payment made. But again, if you don't do that correctly, you yourself as the company can be on the hook for that software you should have collected in the past. So we help a lot of clients clean those things up and remediate that. We work with them on like voluntary disclosure agreements where you might be able to negotiate a shorter look back period. So
Mm.
maybe your liability technically goes back 6 or 7 years. We
Mm.
can negotiate that down to 3 or 4 years.
Wow.
We can help companies eliminate penalties, in a few rare cases, interest. So it's happened
That's huge.
several times that we've saved clients hundreds of thousands of dollars by doing that remediation for them and helping with that. And no software
Wow.
tool can do that on their own.
Definitely not. So let's say we have a founder today listening. They're a founder of a SaaS AI tech company or maybe even an e-commerce company, and they realize based on this conversation that they need to do some catching up when it comes to their sales tax compliance. They're maybe realizing that they should have been charging sales tax and they have not been. So maybe it's panic mode for them right now. What solutions or options do they have to catch up? What should they do? What's their first steps?
So really, I mean, this is going to sound self-serving, and I'm sorry that it does, but call somebody like us and have a conversation.
Yeah.
So the way we always start with all of our potential clients is by having a half an hour conversation. You know, come tell me all your woes. Let me talk you off the ledge. Let's talk about, what is your situation? Who are you selling to? How long have you been doing it? What is your product? Who's your
Mm,
audience? Those kinds of things. And through that half an hour conversation, we can generally help determine where there might be a gap in their
yeah.
compliance and what have you. And then from there, if they decide to engage with us, we will generally start with a Nexus and taxability review. So where we go through that funnel basically for every
Mhm.
state, determine when you have Nexus, what potential exposure you might have, and then we lay out a plan for remediation of that and
Mhm.
get those companies from oh my gosh, I have a really big problem to, okay, let's pull you through and now you're filing. And depending on how many states, that process can last a few months. It might take a year, depending
Yeah.
on how long the problem has existed, how fast the company wants to move, those kinds of things. But we hold their hand the whole way through the process and ultimately get them to the filing.
That probably gives a major peace of mind and help you sleep better at night.
I
It's
hope
not
so.
easy to not be compliant and, there, especially when you have a major exposure, could be very stressful to founders.
One of the things I'd like to add here too
Mhm.
is sometimes we see companies that come to us that have actually erroneously collected sales tax too. So
Oh,
I mentioned earlier that sales tax is
that's a good point.
a fiduciary tax. So it's like payroll taxes, right? So if I
Mhm.
withhold payroll taxes from my employees and don't turn them over, I
Yeah.
mean that's a serious offense. And
Mhm.
that's the case with sales tax as well because the states feel like that's their money and it is.
Mhm.
So if you're a company that has collected sales tax, either by just virtue of accidentally turning on a switch in a software
Mm.
company. And now you've got that money on your books. The states really view that as stealing. And so
Yeah.
you need to make sure you get that off
Wow.
your balance sheet and get that money paid into states. So there's different levels of urgency. If one of your listeners is listening today and says, "Gosh, I think we've done that." That's really a time, that's a flag. You
Mhm.
gotta call somebody like us to get you through the process and get that money off your balance sheet and into the hands of the state taxing authorities before they catch you. I mean, those kinds of things really rack up in a big hurry. So, yeah, there's
Yeah.
different levels of urgency. That's a really big one.
That's a big one. What about the other way around where they have not been collecting, should have been collecting? Do they need to go back in time and collect what they have not collected in the previous invoices? Or is it just you brush it off and then you start fresh when you realize that you should
That's
charge?
great question. So a lot of that depends on your customer. So
Okay.
the state's going to say, "Hey, we want that money." And so
Mhm.
if, a company can go back to their customers and collect it, that's
Mhm.
great. But that's not just a tax question, right? That can be a relationship
Operations
question.
and
Are you going to
relationship.
go back to your customer for 2 or 3 years and say, "Hey, we should have charged you sales tax and we didn't. Will you pay up?" We do see that some in B2B, right? So the customer in that example probably should have accrued the sales tax or the use tax
Mhm.
themselves. They should have
Mhm.
known that they should have been charged that. So oftentimes we are able to get the customer to help pay. But if it's B2C, it's really hard,
It's
right? If you've
hard.
bought something
Okay.
online and you weren't charged sales tax, good luck coming back to me 3 years later and
Exactly.
saying, "Hey, Monica, you bought this widget on Amazon and they didn't charge tax," right? So
No way. I would
that's never
never.
happening.
Founders of SaaS, AI, tech companies, they have triggering events. Let me put it this way. Maybe sales tax is not a priority when they're trying to grow the business. They're scaling. There's other exciting things happening in their companies, and sales tax is
What, sales tax isn't exciting? Come
not as
on.
exciting as raising capital. So they're getting ready to raise funds and they're going into a VC round, for example. Why is it important? And what? to consider sales tax before you go into such transactions?
Yeah, so, I mean, those types of triggering events, funding rounds, trying to get a loan, getting your first financial statement audit, and even all the way to like an M&A
Hmm.
transaction. That's where other outside third party, folks tend to look into your books and say, "Hey, do you have anything accrued for sales tax exposure?" And many times those founders are like, "Sales tax exposure? What do you mean? We're selling a product in the cloud. We're not even selling anything that's tangible." And we have
Exactly.
a lot of conversations like that. I think it's important to be proactive and to handle these situations before you're in a triggering event like that in a perfect world. But I will tell you, we're often brought in the middle of one of those events.
Hopefully,
Yeah,
after listening to this episode, this will not happen to the ones who listen to this episode. They will act early on before these triggering events happen. But it's the same thing for finance teams, like for Cypher, for us, being part of a company, we're making sure that their financials are GAAP compliant before they go into a VC round or PE round or they exit, merge, or IPO. But also important for us to work in tandem with the team like yours, Monica, because of all the things that you explained at the beginning through that funnel. We need to consider physical and economic nexus, and those are numbers that could be kept tracked that your finance team can keep
for
track
sure.
of. So, tell me more about how their finance team, whether it's outsourced like Cypher or internal, can work in tandem with your team, which is the sales tax team.
Yeah, so we work a lot with finance teams, as you can probably imagine, because what we do is so niched, right? There's not a lot of people, to your point, that get super excited about sales tax, right?
Yeah.
So we rely very heavily on third party outsourced CFOs like
Mm.
your firm, traditional CPA firms, even bookkeepers to go in and be sort of the first set of eyes that
Mhm.
says, "Hey, you might have a problem here," and raise that flag. And
Yep.
that's where we work, again, really well with all of those types of finance groups to get to the right answer. And whether they're internal or external, again, we love working hand in hand with folks that sort of speak our language, but then say, "Hey, we really don't want to do this." I have no business trying to help people with their GAAP accounting, right? But I'm really good at sales tax. So I think that's where,
Yeah.
companies like ours could work really well together.
Yeah, well, I mean, the what you do is very complementary to what we do in a sense that, well, first of all, knowing everything you taught us today, now my team makes sure that we have all of the employees list and their locations, so we can keep an eye out on that physical nexus that you mentioned, contractors' location, customers' location, and then revenue streams, and then revenue per customer and their location, so that when you come through and ask for them, they're ready to go and you have them ready. So it's not a
Yeah.
matter of going up and cleaning up everything from a gap perspective and then a sales tax perspective. So I think it's a good team. You need to have these experts to make sure that you're compliant on all levels and that everyone is keeping an eye out on what actually needs to be done in the company.
And it's great to ask the question, right? I always feel like so much of it is the open line of communication. You and
Correct.
I worked on a client, you shared some data with us, and we looked at it pretty quickly and found that, that company really doesn't need our help yet, right? Their
Yeah.
sales aren't high enough yet to where they need to worry. They didn't have any states where they were hitting the economic nexus. They might not be having, employees in any state that matters from a sales tax perspective for SaaS at this point. But the important thing is that we check in with each other every 6 months or
Exactly.
so as that company grows so that the problem isn't a problem that spans 3 or 4 years, that maybe, okay, we're getting close to a nexus and now we need to think about registering in a state.
Yeah.
Or, oh, we hit nexus last month, so now let's register and let's, get it cleaned up. So
Yeah.
it's not a 3, 4, 5 year problem
Yeah,
that is
and,
very
and it's our job to keep track of that data for you to make sure that you have it to make the right decisions,
right.
especially strategy wise with these businesses. Okay, so it's 2026. You've told me before that the beginning of the year is a great time to make sales tax a priority. Can you tell us more about why that is and what should people do now that they're listening to this episode and learning more about it?
Part of it is sales tax is never one of those things that somebody is excited about, as we've talked about, right?
Yeah.
But it tends to be on most people's to-do list, but it is behind all of the sexy things. And I always tell people, January is really a good time to inventory all those things that, you've been thinking about doing. I kind of use December and January. December is a good time to say, okay, here's all the things we should have done this year. And let's make that inventory list and let's carry it to January and then really make some of those New Year's resolutions.
I
Because
agree.
again, it's really never too soon to take a look at the situation.
Mhm,
Many clients come to us and kind of I talk about the funnel. They come to us and say, "Hey, what does our picture look like? I mean, what is the problem? What's our exposure?" And so
mhm.
we tend to do a Nexus and taxability review for them. And what that
Okay.
entails is really looking on a state by state basis where they have Nexus, whether their products and services are taxable, if they have any exposure, and then that remediation. And so if you do that at the beginning of the year, you can have a plan for the timing of that remediation. You can start reaching out to customers if you're going to go back to your customers and try to collect that tax. So it really helps lay out a plan.
Mhm.
I don't want to say there's magic to it, but if you get through January and you're busy when you're doing your year ends and you don't have this discussion with me till February, it's not too late. Even if you have it in March, it's not too late. But I like to use January as sort of a fresh jumping off point to really
Yeah.
look at these things and start the year off fresh.
I 100% agree. And as you're planning for the year as well, it could be one of your things that you put on your checklist and you just need to have that conversation. Well, Monica, tell us more about your firm. I'd love to learn more about what your firm does besides, everything we talked about today and how people can reach out to you if they have questions or need to have that 30-minute consultation with you.
Sure. Thanks, Alma. Yeah. So I think I mentioned we're based in California. We're based in the Bay Area, and our firm really specializes in all things sales tax. So we've
Okay.
got a team of folks, many from Big Four public accounting, some in industry. We've got folks that have been at the software companies. So we really have a deep breadth of staff and managers and partners that have really been there, done that, and seen it all. And people ask me, what is it that? How can you keep that many people busy doing sales tax full time? Well, we help with the Nexus and taxability reviews. We
Okay.
sometimes help with audits. So if you get a notification for an audit from a different state, and there's a lot of states that are
Scary.
aggressive, California, New York, Texas, Illinois tend to be very aggressive audit states. We can help with that process. We've also saved clients hundreds of thousands of dollars by getting involved in the audit when they were in over their head. We do compliance. So we help companies actually get through the process after they've done their Nexus evaluations and remediation and what have you. They need somebody to do the compliance, do the returns, get those funds into the state. So
Mm,
we do compliance. We also
amazing.
help with M&A analysis. So
Oh,
oftentimes we help the seller.
mhm,
Buyers often tend to have the really large firms that represent them. We help we tend to work more in the middle market space.
mhm,
So
mhm.
we're often representing the seller that finds out during the M&A and the due diligence that they have a problem. The buyer comes in and says, "Did you realize you have a sales tax problem and we're going to hold back $2 million and put it in escrow." So we try to whittle away at that 2 million, and they generally do have some kind of an issue, but it's often not a $2 million issue. Maybe it's a $1 million
Okay.
issue. So we do that kind of consulting for clients. We also do some special project work. We might help with refund analysis. So sometimes
Wow.
clients overpay or
Mhm.
there's refund opportunities. There might be certain exemptions or just things that they hadn't thought through. So sometimes we're in a position to help clients with refund opportunities as well.
That's great.
If it touches sales tax, we pretty much do it.
Well, anything sales tax related, you're the expert. So
Yeah.
how can people reach out to you? How can they connect with you? LinkedIn, website,
Yeah.
what's the
All of the
all of
above.
the above?
So
Okay.
I'm searchable and findable on LinkedIn. I'm out there. I do a lot of updates for folks. So we do a monthly newsletter on LinkedIn.
Okay.
Reach out to me at Monika Miles on LinkedIn. Also check out our website. I know that sounds like, old school nowadays, but we've got a really cool website. We've got an interactive SaaS map. So if you're
Oh,
curious whether SaaS is taxable in your state, there's an interactive map. It's color coded. You can go in and check it out. We're really proud of that. We launched that last year and we're excited about it. We're getting a lot of good press on that.
I
And
just
yeah,
I just want to mention the website. It's milesconsultinggroup.com.
it is. It is. It's Miles
That's so
Consulting
that
Group.
people
Thank
can
you.
go to it directly. You're welcome.
Yeah.
Anything else, Monica, that you think we should talk about before we wrap up the episode?
Just want to impress upon your listeners is that,
Yes.
again, it's easy to put this aside because it's not as exciting as raising money, and there's federal and international, and there's a lot of things that seem sexier than sales tax. But sales tax is a gross tax. And
Uh-huh.
so we sometimes we deal with a lot of, again, startup companies, like, and I know you do as well, and they don't have income tax exposure, right? They're in net
Uh-huh.
operating loss situations, and they might have tax credits that offset
Yeah.
their income tax exposure. And so they have a false sense of security that that might be the case on the sales tax side as well, but it's
Uh-huh.
not. Sales tax is on the top line gross. So if you
Yes.
have, $1 million of sales and you're doing it wrong, is a 9% problem off your top line something that you're willing to deal with?
Yes.
And, many of our clients are in the 5 to 10 to $20 million space. And if sales tax rates average about 9%, if you're getting it wrong, that can be a big number very quickly. And so, it doesn't cost you anything to have us take a quick look at it and see if there's a there and see if you might have a problem that we can assist with. So don't take too much time. Don't keep pushing this down the road. Take a look at it when you're in your younger stages of the company. Um, and we
Yeah.
can help. There's help for that.
Of course. And I think, and if you have those goals, again, that we mentioned, M&A, going through maybe an external audit eventually at some point, or you're going to deal with institutional lenders, investors, VC, PE, or again, like I said, M&A exit or even IPO, these types of issues could really create obstacles when you're going through due diligence. So why would you work so hard? And then you get to that final goal that you've been working so hard for to then
Yeah.
be blocked because you didn't realize that you should have made self-tax a priority. Very.
It's something else that you have to deal with when you're excited about maybe selling your business or having that exit
Yeah.
event, and now you've got to manage this. So we really recommend, if you think you're gonna have a sale transaction in the foreseeable future, deal with this now before you come to the table, because the buyer will be really happy about that as well, and know that you have addressed it as the seller, and you can come to them and have a clean slate and say, "Hey, I've worked with a consulting firm like Miles Consulting Group to get our sales tax all shored up, and here's the package, and we're ready to go."
Yeah, I love that. Well, thank you so much, Monica. I learned a lot myself, so I'm really excited for this episode, and I'm excited for everyone who will get to listen to it. And I'm sure there'll be another one in the future.
I
So
would love
cheers to
that.
the next one.
Thank you so much. Thanks, Selma, for giving me the opportunity to speak to your audience today, and I look forward to sharing more on another podcast. So thank you so much.
Thank you, and have a great year.
Thank you. You too.
Bye.